Video 3 of 3 on Sunday 4/14. Who's still with me? I still have 46 people. All right, 1020. Who is this? Paramount. They have good shows. I was watching Paramount last night. They do have good shows. 1020. If you lose that 1020 single digits for sure, 880. I don't know how low it goes. And rallies have a bunch of sellers. That blue line they needed to hold, they couldn't. You can repeat it lower. So 1280 is a problem, 12 is a problem, 1160 is a problem. So they're selling rallies, and hopefully the low is 10. If you lose 10, you go to 880. So if I'm long already via shares, I don't add. If it goes to 880, double down. If you still have room in the risk profile. Earnings in a couple of weeks. Path, that's not good. P&L is okay, it looks like. I'm not sure. I'll have to study the business. They're losing support, and the one that was important to hold was 21.5-ish. And losing that says it's going to 1850. I wouldn't touch it. It does have supports. Prior fail zone. Here, it should be support zone. But it's pretty old, so I don't know how elastic it is. So I would say if it goes below 1950, it becomes intriguing inside this box. And rallies will be curled down, I think. Rallies will be met with sellers. They're selling it, right? So maybe curl back down like that. There's a lot of resistance above. They might try one more time to recover. Phillips, everything I said about Oxy works here as well. It's easier to get to 154 in my book than it is to make a new high. That should help you trade. Where it would interest me, below 148. There's volume. And if you lose 142, you can go to 130. Whoa, Nick, what's going on? Nothing. I'm just telling you what the levels of interest were on the way up, and they might be on the way down as well. RIOT. Everything I said about MSDR does not apply to RIOT. This is a joke. This company is a joke. Used to be a biotech, and then he decided he wants to be a blockchain company, so he changed the name to include blockchain, I think, in the name. Oh, they changed it to RIOT Platforms? Anyway, I'll tell you one thing. If you lose 850 in RIOT, it's probably going to 6. I would not invest in this company. Rallies are going to be met with a lot of sellers at 1150 and 12. Can it spike to 15? Sure. It's a Bitcoin thing, but it's not a good Bitcoin trade. And if you're trading this chart, you better hope it holds 850. ROKU, I closed my long, and it was pennies to close. I closed it. I would re-engage long on any dips. It does have a lot of support. So if I wanted to go long here and I can stomach the exposure to earnings in a couple of weeks, actually 11 days, I would. But now I see a problem breaking out of 66. If they do take out 66, they can rally to say 75 quickly. But I don't think it's easy. So personally, since I just made money on it, I will buy the next big dip if it comes. Let's say the market's correct. This one would be 46, 48, 44. And then I will go long. RTX, who knows what's going to happen with the Raytheon. Raytheon, right? No? No. Is this Raytheon? Anyway, RTX, if it has any exposure to war, it'll probably be up on Monday. I wouldn't chase it. This stock is great. But if you look left, it's been here before, and look how big of a problem it's been. I don't know why I have so many lines on it. So this came to fruition. They did not repeat it. And for the same reasons, they bounce off of support. They are going to have to break out from resistance. So it is pretty close to a breakout. If it goes above 106, 120 is possible. So I would not short it. But if I'm looking to go long, I should know that I'm a trader buying into a prior fail. And Monday this week, if it is a war company, it might be interesting. Starbucks, it is interesting. I would start longs here if it wasn't for earnings in 11 days, but this is a good P&L. The problem with this is that rallies are going to be meeting all these blue lines. These blue lines are problem areas now. They were support and resistance, and now they're all resistance. And they just lost a bounce level. Look at the buyers below. 82 is a solid support level, so it is on my to trade long list. Very intriguing. I wish markets weren't so high. So technically speaking, this one should stop at 82. But if the market's correct, and that's a big if, we haven't even started, this can be 75. So I would take a nibble at 82, maybe half of a position here or into 82, or sell puts in 75 and forget about it. Schwab, starting to hate that company with the transition from TD Ameritrade for myself. Going into a pivotal zone, I don't think it's a starting point. So yes, it looks like it can break out from 73 or 74, but I think it's easier to get back to 62 than it is to get to 82. So use that confirmation or that statement to trade. Rally, sold, new low, rally, sold, new low, rally, sold, no new low yet, but this whole thing may be the rally. So I'm saying that this rally and that rally and this rally are similar. Maybe they revisit this area one more time. Even if you're bull, then you get that. So I would buy the dip. I wouldn't short it. Who is this? ProShare Ultra Short. What? Oh, this is Ultra Short. Okay. I'm going to give you a piece of advice. I wouldn't touch these things. Okay, so look at this. Anything that has a chart like this over time, I wouldn't touch it. The all-time high is 1 million or 1,000 or what is it? 10,400. Why? Because it's a manipulated stock. If time ticks, it loses value. All just sitting there. Why? Why would I ever want to invest in a stock like this? Now, if you're technical and you buy it on Friday because you expect a drop on Monday, okay. But I don't accumulate it, and I don't, quote, invest in it. I trade. And for this one, is I would buy the next dip. So if Monday, Tuesday, we pop in the market, this one will dip down to 25.60. Maybe you then buy a call and get rid of it within a day or two. And that's about it. I wouldn't touch any of these. SQQQ, TQQ, this one, TZA, TNA, everything leveraged on crack. I wouldn't touch it. Boyle, they're not tradable. They're just not tradable. They're not investable. They are tradable, but if you need to know your charts, and it definitely should be short term. Smart Global Holdings. Not familiar with the company fundamentals. Technically 1750 looks like solid support, and now 23 or higher, it should be impossible to overcome. So you're stuck in a range. And if you lose 18, you can probably get to 15 because there's no volume and there's a whole bunch of volume above. So you have resistance, stronger resistance than support. SGML. Maybe it's not done falling. Maybe 1360, 14. Easier than, say, 16 or higher. Rallies into 15.5 and 16 will be met with sellers. You can see that and that's a resistance area. It's easier to come down to 13.5 where you would have support below that. SHAK. Never been in one. I don't think I've ever seen one. Are they on the West Coast? Ooh, my goodness. Yeah. If you lose last week's low, you probably go to 84 quickly. And it's going to be difficult to come out of 105. 18 days, you get earnings. There's no Shake Shack in my gym, no. There is a cryotherapy place where you can sit in a sub-freezing tank after you work out. Never tried it. Okay, check this out. A while back, 2024. Look at this box. That was an important box. Look how important it was here in all in that period of time. When was that then? Okay. And look how important it is now. So I will leave it where it was, and I'll just let you know that I'll extend it this way maybe. So you lose the bottom end of that blue thing, you're going to 750. Who is this? SMCI. Oh, okay. I know I have more lines. I've spoken a lot about it. So this one where Hypium is not a lot because they actually increased their sales like NVIDIA. But technically, I'm worried about, fundamentally, I'm worried about it having pulled sales forward. I don't know if it is, or is this a new level of sales that it's going to maintain? So technically, the risks are if you lose last week's lows, you're probably going to go to 780. And if you lose 800 and 790, you might be losing 700. So this is like a disaster waiting to happen. But it all can reverse higher. All they have to do is just deliver the same level of growth. And then I think they would appease expectations. Very tricky chart. Very hard to short. But there's a lot of froth. And I mean a lot. So they better continue on delivering solid sales. SOFI, getting closer to being interesting. I still wouldn't touch it here. They're still trying to, I don't know if it has any exposure to headlines from the government about student loan forgiveness and all of that. I can tell you one thing, rallies to 760 would be met with sellers and 790. And you do have a lot of support through 680. So there's not much I want to do with it here, to be honest. I would leave it alone for myself. If I own it, I would leave it. I would not add. So here's a stock. I rewound the comments from 325 right there. It was a Sunday like this one, and I drew these green lines, and I forgot my words. I said, this is not for me here. This stock can go to 4. Those were my comments on 325 right there. And I said the only reason the stock is got attention is because NVIDIA has eyes on it. And here it is last week, 4.1, 4.2. So if you lose that, you might finish my arrow. But let's say you were interested in it here or here, and you listened to Nick and you did not get engaged, and now you're interested in it still, take half of a position. And then double down if it goes to 3. It can rally. Now SQQQ, another garbage stock I would not chase. But let's say you bought calls and you made money with it and you didn't exit, then you don't know how to use the sticker. This is a temporary trade. You buy it, you make money, you exit, and you rebuy it when they dip again. So it is, you do not accumulate SQQQ. Why not? Okay, I just showed you why not. What is this? The all-time high is 520,000. Clearly, it is not a quality ticker, so stay away. Tesla, not a quality ticker, stay away. No, I'm kidding, of course. Everybody loves Tesla, don't they? All right, so Tesla is still in the hands of the sellers on a weekly basis. It needs to be much higher than here. And if you make a lower low than last week, if you lose 160, you're going to 140, which is my comment. It's going into 140s in the series of lower lows and lower highs, and that was months ago. And we got to 160. Let's see if we can take out 185, 184 before 160. You take out 184, you make a lot of progress against my comments. Not out of the woods, but great. This one just reported. Interesting. I didn't even notice. Okay, so it is a bearish chart. Its target 1 is 140, target 2 is 136. It will rally with whoever reports this week if they rally, and it will fall with them if they fall. I can tell you it's going to be difficult to break out of 148, which is what it needs to do to get to 156. So I think it's easier to come down to 138 than 148. Good company, by the way. Great company. TXN, We've traded it before. Earnings are in 9 days. I wouldn't trade it now. They're selling rallies, and that's what I would expect. Rally will be sold and probably drifts down to 163. The earnings reaction is a coin flip, so I couldn't tell you. I know that there are a bunch of sellers. Look at them. Sell, 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 sell. So, good company. I would. We made money by selling a put spread on a bad day or bad jag, and I will repeat that. ULTA. Everything I said about Lulu, I can say about ULTA. And this one still has not lost its level like Lulu has. So the risk on ULTA, if it loses 435, 437, it may end up at 400. There's no volume down here, so there's a lot of weakness down here. So you could get 415. How about that? 415. So having said that, if somebody wants to buy shares at 415, they can sell a 415 put now. And then they would be assigned shares at 415, and their break even would be like 400. Reach out if you need help with that. I think it's hard to come out of 475 again. This was insanity above 475. UNG. I'm actually considering taking along in UNG as a crazy trade. Okay. Why? I don't know that stock, but in fact, you can't really trade UNG by UNG. You need to go to NG. NG, the futures contract, it shows you the all-time highs. UNG does not show you that. So here's a monthly chart going to 1990. Look at every time it gets into this zone, and the zone is wide. So how do I trade this? I would buy shares and forget about them, and you might get a super spike and exit. You're not going to get rich off of it, but it sure is fun to ride a swing higher. Let's see here. So how can I accomplish this? I can buy shares. I can sell puts to buy shares, but I never sell puts unless I want to buy shares, and buy in the money calls. Leaps. So that might be a combination. But I have to tell you, this is a crazy ticker. And I mean crazy, like insane. And this is not an all-time low, what you see here. It can fall 30% from here. 30. Okay? All right. UNH is also intriguing. It lost a lot of important levels. It's in the hands of the sellers, and it's why the Dow was correcting. If you remember last Sunday, I said the Dow, the DIA, has an 8% drop. Well, this one needs to be dropping for that to happen because it's a huge component of the Dow. And it's losing support. It needed to hold 446. So now it could be 410. It has support at 425 or lower. But look how high this thing is. So also, they're selling rallies. So yes, it could bounce here. So if I take a trade, I would exit because it might curl back down and end up much lower. For me, 390 and lower would be outstanding. Looking at levels on the chart. Solid support down there. UPS, I don't trade this garbage. It and FedEx, I've divorced them. So let me give you the charts comments. Earnings in 9 days. That's a wild card. Seller, seller. You take out 164, you will end up here at 175 if you take that out. Until then, this is resistance. And you have solid support, solid support. There's no reason to expect them to lose 132, but if you do lose 132, you're going to the low teens, 117, 18. Not low teens, to the mid-teens. Ooh, look at that gap. Yeah, you would comfortably fill the gap and then some. That was insanity. So let me tell you something about this head and shoulders from here. 70 points from 160, 70. So 90 is the target of that head and shoulders. That's the technical target. Next target is more like 23, which you've already established. So somewhere in the middle between 23 and 90 lies an area of interest for the market, which would put it squarely inside that. So I'm going to point out 109, 110. I like it there for myself. I might be convinced to go long by selling a put. USO, I'm short, and what a ride has it been, right? We took it, it went green immediately, then went super red, and then on Friday it was red, and then green. So now it's green, and I will hold the short. Now the USO can break out to high heaven from here. I don't know what's going to happen on Monday. If not, I think I can get 75 out of this one. I could ride it down to 75. Target 2 is like 68, but that's a long shot. So I still expect a drop. It is vulnerable. And to be honest, I shorted, I don't know what level, say vulnerable. That's target 1. Both these arrows are target 1. T2. These are technical comments, okay? Wells, they reported, right? This is a bearish chart. It did well comparatively. Now, look at these sellers. Whoo-wee. Okay, here's the statement on Wells. It makes for a decent short. If they don't break out of 58, they're going to 50, below 52, and maybe even 46 in the long run. Okay, so this one as well, I will say vulnerable. Corrupt culture, let's go. XLF, you know my story. I'm short via naked puts. I bought my first set of puts. The stock rallied against me. I lost money on those, but I stood in them. And then I bought a second set of puts, shorter term, and they were very, very, very profitable. So now overall my trade is very green. And I trimmed all the short-term puts, and I'm holding the bearish puts that are out in time, which are also green on their own, not to mention the greens I got. Which means what? I'm short banks. I'm calling bull crap on banks. They're at extreme levels from valuations perspective. For example, JP Morgan price to book was higher than it should have been, and now it's back closer to being in line. So as a trade, this is a chart, betting on chart, and behind the thesis that banks are overpriced. But we'll see how they react out of this earnings season once they're all done. Sometimes they reverse, they change their mind. Zoom, interesting at this level, into 60 and 58. I would be long Zoom. It's on my trade to go long. My list of stocks to go long. I like it. But if it loses 58, I have no idea where it goes. 52. So I would leave room to add. So if somebody wants to go along with shares and they take half the position, this is a good place to start. And I would double down if it goes to 52 or 50 or lower. If somebody's selling puts, they sell half. I would not buy calls. I would sell a put spread and buy a call spread maybe out in time. Zscaler, don't touch it. It made us a lot of money. And I told you they could do the party hat and go lower to the box, and it's heading towards the box. Now, I repeat that comment that rallies might do this. So, and this stock rallies fast and long in both directions. The company is good. There's nothing against it, but the stock is insane. So if I'm dying to get long, I would sell puts. Oh, look at that red thing. Okay. This red thing is I copied and brought here from somewhere else. So if they continue doing what they're doing. Now, this descending wedge could get a lot of big rallies. So you may find yourself pushing at 195. So if you're that kind of a person fast, you can go long and get out on rallies. But as an investor, slower trading, you might want to be careful. Zoetis, it was on my list to go long. Woo! And it just beeped at me. P&L is fantastic. So I think I'm going to go long this week on Zoetis. It's been on my to-trade list and earnings in 18 days. I'm not so sure. Anybody know why this is falling like that? Let me know. This is crazy. The Wells Fargo, to answer your question, yeah, it is a harmonic pattern. So there are buyers below 147.5, but they could be anywhere inside this box. I mean, wow. Look at the P&L. I mean, the P&L is a no-brainer. One set of buyers, another set of buyers. So everything here is support. Everything. So if I'm an investor, I don't add, and I would take half of a position, because now I know the bounce into, quote, solid support that didn't act like solid support. I don't know what this drop was all about. Did they pre-announce? Is it a healthcare? Ah, okay, so that makes it wild. Who killed their pets? Owner blame meds. Oh goodness, yeah, no. So there's a story behind efficacy or something like that. So study the company. The chart and the P&L say it's an opportunity, but the fundamentals you have to look into actually lawsuits or whatever. So figure out. Thanks for letting me know. So ZTS on paper is a good trade, but you need to do homework. And that's it. Woo! All right. Be safe this week, and thanks for watching at home.